Hey guys, welcome to day 14 of the trading marathon here on this channel. My name is Daniel and this is the most important video of the risk management chapter that we are going to discuss in this trading course, and I will provide you with 5 simple rules which are following a rule set that you just need to follow, but it will take a lot of discipline to follow it, I can say you that much. But if you are following those rules, you will genuinely have a smooth journey in the trading sphere. Yes, whenever you go against those rules, that will probably be a day that you will remember. Either you will have an unreasonably big amount of win or an unreasonably big amount of loss. But in both cases you will remember it, and I instruct you to not have those days, because trust me, what your actual goal should be as a long-term profitable and successful trader should be to go the journey in the best case like this. Okay? Linear or exponentially to the upside with no huge setbacks. Whenever you see something like this in your P&L, that's something we need to work on. Or that's something that was one moment when you went against the rules that I will provide you with right now. Okay? So let's first of all, before I introduce you to those 5 rules, define the 2 different types of money that you can possibly trade. You can trade your own money, that's the first type of money. You can trade prop firm money, that's the second type of money. We need to treat those types of money differently, since the prop firm money has a different rule set that we need to acknowledge and also take into consideration when creating the risk management plan, right? First of all, for those people who don't know what a prop firm is, I want to explain the concept in a short form. There is a link down below in the description to FTMO, but that's not my point. For a prop firm, it's a company that offers you a challenge, a trading challenge, where you pay for the participation of the challenge and you have a certain goal. I can tell you in numbers. For example, for $500 or euros, you will get a 100k account with fictive funds. So that's not real 100k, it's just fictive funds. And you have the challenge to gain 10% of profit on this account without losing 10% and without losing 5% and without losing more than 5% daily. So you have a maximum daily loss of 5% and a maximum general loss at all of 10%, and you have the goal to win 10%. That's phase 1. And then phase 2 is even more easy. You will have the goal to gain 5% without the same loss limits, like maximum overall loss 10%, maximum daily loss 5% in phase 2. And if you succeed, they will provide you with a real 100k account. And the profit is nearly all of that is yours. Like 80% or something belongs to you if on whatever you make on this real account after you completed the challenges. So you understand that is something you definitely want to do as a beginner, or as long as you have less than $1-2 million, you should be definitely working on succeeding a funded account, a funded challenge, and withdrawing some funds after passing the challenges. Yes, that's very likely the fastest way to gain some money without taking unproportionally big risks. And we need to take the maximum loss limits into consideration when creating the rule set that we need to apply when working on those accounts. So I will provide you with 5 rules in total, okay? 2 of them will be concerning the funded accounts, and 3 of them will concerning the personal funds, and I think that should cover it pretty well. Let's start with the funded accounts. You should always, whatever time frame you're analyzing, whatever you are trading, whatever you're doing, you should only risk 1% per trade on a funded account. Write that down as rule number 1. Funded account, whatever you touch, make it 1% risk. Doesn't matter what it is even, make it 1% risk. And the second rule for the funded accounts is make maximum 1 trade per day. you don't even need to make one trade every day. I just tell you, have a maximum of one trade per day. So you only have days with 0 trades, or you have days with 1 trade. And in this 1 trade, there will be only a risk of 1%. If you follow these 2 rules, you're actually covered with the risk management knowledge that you will need to handle funded accounts. Yes, I mean, it will be very difficult for you to follow that instruction. Yes, I know that. It will take time to pass those challenges, and it will go over weeks, and maybe if you fail 1 to 3 times, it will even take months. Yes, but you will succeed. You will succeed, and it is absolutely the best way to do it. I can tell you my honest opinion. I mean, it's very a subjective topic, so maybe some other trader will tell you something different, because there is no right answer to that, but that's definitely how I see the situation. Yes, you need to have 1 trade maximum per day and 1% risk per trade. That's it for funded accounts, those 2 rules. And for the own funds, the first rule that you need to follow is that every single trade you open should have a risk defined between 1 and 5%. Okay? So the range between 1 and 5% is your risk range per trade. Rule number 3 overall, and rule number 1 for the own funds. The second rule is that the exact point of risk between 1 and 5% is depending on the risk-reward ratio of the trade and on the time frame we're looking at. Okay? You can, I mean, that's also very subjectively speaking, but that's the rule. If you are analyzing on a daily time frame where every single candle has 1 day, 24 hours to complete, and then comes another candle, the Elliott wave analysis that we will do on the chart will cover such a large time period of weeks that if you open 1 trade, it's absolutely reasonable to go in with 5% there, because this trade will go over weeks, as I said. And if you have, let's say, 1 to 6 risk rewards, then you will possibly gain 30% with that, which is very, very good, which is extremely good. You can trust me on that, okay? So if you make 30% in 1 trade, it's a lot. And even if it takes you weeks, it's a lot. Drop your entire mindset about 30% is not much, it's a lot. Maybe, if you think that's not a lot, just do some research on what the top hedge fund managers on our planet are making per year. And you will find that it's less than 30% a year. And so when I tell you you will make 20-30% in a couple of weeks, you should view that as a lot, because if you have a lot of money, it is a lot. If you don't have a lot of money, you should work on passing a funded challenge, getting 100k or many 100k or many 200k accounts, and making 20-30% there, which will lead to a huge payout, and then you can use this money to continue from there. So that's the strategy, okay? But 30% is a lot. If 30% is not a lot for you, then you just have too little money, and you can get more money by making 10, 20, 30% on a funded account, which you can pass easily as long as you can make 10% to pass the challenge. You see where I'm getting? So the last rule is the same rule that I also gave you for the funded accounts. It's also applying to the personal accounts. It's maximum one trade per day. Yes. So 1 trade per day applies to both the funded accounts and the personal funds. So basically there are only 4 rules. One is just applying to both. Yeah. And the exact risk per trade is on the funded accounts always 1%, and on the own funds you are given a range between 1 and 5%, which is a reasonable range, and you are supposed to choose a reasonable choice within those 1 to 5%, depending on the risk reward of your trade and your analysis, and depending on the time frames you are operating on. Okay? So yeah, that are the simple instructions that you will need to follow. I know it doesn't sound hard, it sounds very simple, and I really hope you can do it and you can follow those simple instructions, because as I told you in yesterday's video, if you tell an overweight person the simple instruction to just eat more vegetables and less fast foods, they will also, in some cases, not be able to follow that instruction, even though it's very simple. So keep an eye on your own behavior, be very strict to yourself, journal every single trade, every single thought, and every single thing that is spinning around trading and your risk management down, so that you later on know where maybe the point happened, where something went wrong, or where you made maybe a wrong decision, so you can at least figure out why that happened. Because the only real big disaster is when you face a big loss and you don't know why. So avoid the big losses. If you follow the instructions, you will very skillfully avoid those. And if you are not able to follow the instructions and sometimes you go crazy, then at least journal it down, so you will be able to find out when this happens and why this happens. Okay? So I think that's it. I didn't even show you. Did I show you yesterday's house marathon, the 13th? And today I also do. Here's the 13th, here's the 14th. It's all covered. Hey, now I can show you also the biggest statistic of the weekly overview. Wait, I will show you that also. Let's check it out, guys. So in the last 3 weeks, I've had like 3 weeks ago 150 kilometers. It was my ultra marathon. Then between the 1st and 7th of June, I had 164 kilometers, which is like 120 miles or something. Also the 150 kilometers is like 110 miles or something. And this week I've made 167 kilometers, which is like 125 miles or something. You know? So, you know, following the rules of applying 1% risk is maybe even harder than doing a half marathon every single day. Because, I can tell you even why. Doing a half marathon every day, you already expect it to be hard, so you are very focused on the task, and if you already expect it to be hard and still commit to it, you will be able to complete it. But the simple instruction to just use 1% risk per trade is a very simple instruction, and you will believe it's simple to follow, and that's probably why you will make a mistake and forget to follow it on one day, which will probably cause a catastrophe, which we will want to avoid. So treat the risk management instructions as a same difficulty of task that you need to follow and complete as if I would tell you to run a half marathon every day, because it really takes a lot of discipline to follow that, and I really wish you all the best and the most of success to be able to really follow it. With that being said, guys, we see each other in tomorrow's video. It will be another risk management video, but not about the market risk. We will talk about the different risks you will have as a trader, and we will define them also by, you know, degree of damage which is done to you, and also by likelihood of happening. And I hope I will be able to help you a lot with that as well. With that being said, stay hard. See you tomorrow. Ciao, ciao.